Okay, my G's, I'm back to my base now. I'm back to Liquidity. Okay, my base. So right now, I'll be able to have enough time to do most of the video that we usually do way back. Okay, so as promised, this is my first video I'm going to be doing in this series. I will make it very short so that you can see what I'm doing. Now, the first thing I need to do is mark out liquidity point. This is GBP USD, and you can see that I'm on the 1 hour chart. So I'm going to mark out the liquidity point, because if you look at it, you will know this is a downtrend, right? We're in a downtrend on the 1 hour time frame, not on higher time frame. Take note. But the reason why I'm marking out my liquidity first on the 1 hour time frame is to really know where price may go ahead back, if it is going to continue that downtrend, or if we are going to have what is called break of structure and it changes direction. But then I would have known where I'm anticipating price to get to do that. Okay, so the first thing is that on a 1 hour time frame, I'm going to be marking only the highest point. Example, let's assume this particular one was here and this particular one was here. I'm going to be marking this and not this. This is the present price action. Let's assume this price action was where this long one is, and this long one is here. I'm going to be marking the long one because it is where liquidity is resting. This particular one has not gotten there. That is, if it is here. But presently now, the highest liquidity point I'm seeing here is this. Okay, so I'm going to mark this. I'm using a phone because I'm more used to a phone. Okay, so I'm going to mark it. Then to really pinpoint it properly, I'm going to go to a 5-minute time frame so that I can be able to mark it properly. It needs to be tip top. Okay, it needs to be tip top. Now here we cannot buy, we cannot sell, because we need to know the direction of the market, but we need to mark this out first. Okay, first one is marked because I'm going to do like 3 of recent price action. Okay, do 3. So this is the first one. I'm going to color it red. The last one I'm going to mark will be below, and I'm going to color that green, meaning that will be our support. Okay, now take note, don't mark liquidity. Let me see whether I can see an example. Don't mark a liquidity that is closer to each other. Okay, I didn't see any example. Okay, all right, so that's the first one. I'm going to mark another. Clone this. Let me lock this so that I will not shift it. So I'm going to close this. Instead of me marking this, I'm going to mark the one that is higher because they are close to each other here. Okay, so I'm going to ignore this and mark this. This is the next one that is higher, right? Make sure it's accurate. It's accurately marked. Okay, accurately marked. Go to 5 minutes and see. Yeah, that's marked well. Now this liquidity I'm marking are going to be our point of taking of profit, you know, or maybe we want to sell, point of using stop loss, right? Okay, so let's go back to 1 hour. I still need one more above, then I will now go down to mark another. Okay, so the next one I'm going to mark will be this. I'm not going to mark here because this is the highest. Now each one I've marked here, I'm anticipating price to come here in the future and do something. I'm anticipating price to come here in the future and do something. Okay, anticipating price to come here and do something in the future. Maybe it gets the price returns, or if you break any one price return. Now that we have marked 3 liquidity, we need to go to the bottom to mark 1. So I'm going to use a 4-hour time frame and look for any recent low. not this one, because this is not really the low. If price breaks this one, it's going to go to another, so that will be my base. Okay, that will be my base. So this will be the one. This will be the one. Now mark the next one as well. So let's go to 1 hour and adjust it. To 1 hour and adjust it. It's better to use a phone, but it's better to use a computer, right? I'm going to be using a phone. Now I'm going to tell you why I'm going to disqualify some of these ones that are marked. Okay, very, very important. It's a criteria for you to decide whether this is a liquidity that needs to be taken as a serious liquidity or just ignore it. Okay, I want you to test this out, and you'll be surprised how easy it is to see market, to be able to predict the market outcome. Okay, all right, so we have marked like 5, right? And these 5 we have marked are, let me use a higher time frame so you can see, let's say 1 day. These 5 we have marked are where present price action are playing around. Okay, present price action are playing around. So presently we are on a downtrend, even on the 1 day chart. A series of higher high, higher low, higher high, higher low, right? But on the long run, we are still in, until this low is being broken, we are still in an uptrend. But presently, on other time frame, like 4-hour time frame, we are still on a downtrend. Okay, good. So now that we have marked this, now for you to see that a liquidity is the best point to mark, there must be an order block above it, or there must be a fair value gap above it. Fair value gap above that liquidity. If there's no fair value gap, ignore it. Now you can see that this is a 1 day, this is a 1 day, right? You can see that there's a fair value gap above this, even on a 1 day. But there's no fair value gap on the second one. But on the third one, there's a fair value gap. I'm going to do it on the 1 hour. So, but then I just want to show you what I mean. These are the value, meaning this particular line is not valid. For me, I will delete it. I won't use it because it does not have any fair value gap on the higher time frame. Take notice of 1 day time frame now. So now let's go back to 1 hour where we need to really see which one is valid and which one is invalid. Okay, so I'm going to go to a 1 hour time frame. Now what I'm going to be doing is I'm going to be looking for a fair value gap above. Let me mark this blue. This particular one below, I'm going to mark them blue because these are going to be our support, support here, where we expect price to get to and push back up. Okay, so I'm going to color this green in case that fails. This will be our support as well. Okay, so the rest above is resistance. So now what I'm going to do, we're going to do it 1-1. So the first one here, where is the fair value gap? Do we have fair value gap? Yes, we do. So let's mark it out. I'm going to refine it on the 15 minutes. So you'll be surprised at the accuracy of what I'm doing. Now, usually for me, for example, now this is the fair value gap here, but price has breached it. It has covered half of it up to this point, right? So I'm going to reduce it to this point. This is why I'm reducing it to this point, because price has already validated or has entered into that fair value gap up to that point. On a 15 minutes time frame, we're going to get a better area. But then just mark it on the 1 hour time frame, then we'll come back to it later. Okay. Alright, so we are done with this. I'm going to lock it. I will unlock it later when we get to 15 minutes. it needs to be accurate. Use a computer, but uh, I'm just very comfortable using my phone. Except I'm at home, that's when I use my big screen TV. Okay. Alright, so the second one here, on the higher time frame, we did not see a fair value gap here. But you can see on the second one, we're having a fair value gap here as well. I'm going to log this. We're going to refine it, so be patient. And this last one, good. I have a fair value gap here. You can set limits, forget about it. You just come one day and see that it has like last week, my trade was running, I did not even know. Well, I just set it and left it. This is basically what I did. There was no magic. Alright, so we have drawn this fair value gap. We have marked them out. So let's come to the bottom and see. Do I have fair value gap here? Yes, we do. All my entries are at the beginning of the fair value gap or the middle, 50%. Okay, so here the fair value gap has been cleared. Take a look at it. So even if we are going to be using, this is the only point that is remaining for this fair value gap to completely be swallowed. But so meaning that indirectly this has been cleared on the higher time frame. On the 15 time frame, we can still see something, right? But it has been cleared, so I'm going to be using this, then cancel that one later. But then let's leave it. So let's see, scroll to the other side and see where the next fair value gap is. The imbalance can be filled as well here. I'm still going to draw it. It has been filled. You can see that price came into it, collected, filled the fair value gap and move upward. So indirectly we have no fair value gap below here. So to really be sure that we don't have any fair value gap that is remaining here, let's go to the 15-minute time frame. That's our final refinement. Okay. So first, let's start with the below ones before we now move upward. This is a free okay, good. You can see price has already filled this, but in case you want to use, you can still use it because we don't have any other fair value gap, right? You see that if you reduce the time frame, you will see that it must be to the tip. So always take note. You can go to the lower time frame to help you make sure that you marked it properly. Okay. So we cannot be able to see anything there. So let me use a 30 minutes. Let me start. Okay, let me use 30 minutes to see. I just need to mark it. If I were doing this alone, I would have turned my phone right the other way. But I want you to see what I'm doing. Okay, there's a fair value gap below, right? Now this has changed something. Though it's small, but then it still need to be filled, okay? Right, look. All the fair value gap above has been filled. So I'm going to consider this. I'm going to consider it useless. I'm going to delete this. Okay. Now that this is done, I'm going to be considering anytime I want to take a buy, it will be from this area, the last area below. I usually use just 15 pips stop loss. 15 pips stop loss. I usually take it here. Most times I set 2 entries. One are just the tip here, the other just the middle or maybe at the end here. And the reason why I said the end is because possibly I just look at it and price may not get there. But in case it get there, that's a double entry. Okay. So let's say I set additive and I use a 15. Okay. Then I'm going to be taking it to the, let's go to far. I'm going to be taking it to the next area. Forget about the gimmicks. Nobody will teach you most of these things. I paid for classes. They didn't teach me. I had to just stumble upon this on my own by watching the charts. Okay. All right, so this is my first take profit. My first take profit point, the fair value gap here. If price plays according to this next week, I've just done 1 to 12 of my trade. Okay, you can take trade anywhere, but this is what I will be anticipating next week. That for price to come down here, pick me up and go and fill the next fair value gap, right? Then the second one, let me close this. My TP2 will be somewhere here. That's once this liquidity is taken here. But remember, you can also use 50% of the fair value gap. But then you can use that to be safe. This 1 to 16. Then my final take profit. What did I do? Did I clone this? I think I did. Yeah, I did. My final take profit will be this. We have not really edited that, but then this is what I'll be anticipating. This is a system of set and forget. Set and forget. You can try this on a demo account and see so that you can be able to understand it properly before you test it out on a real account, right? So let's go to a 4-hour chart and see what we have done. The first one is ratio 1 to 12. The second one 1 to 16. The last one is 1 to 19. If you are lucky enough and the 3 plays out, so if you are the kind of person who can swing, this is what you'll be looking at. So because we're on a downtrend, I will not be looking for a buy from this point, the highest point. I'm not going to look for buy from any of the other points. We'll be looking for a buy from the highest point, which is somewhere here. So depending on how the market is going to open next week, if it goes up, I'll be expecting a buy from here, and my take profit will be here. I'm expecting a sell. I'm sorry. I'm going to be expecting a sell from here, and my take profit is going to be here. So that will be about 1 to 14. What simply means that, see, when they say risk what you can afford to lose, it simply means you can use $10 to make $140 if it plays according to plan. But then when you have something of this nature ready, you just set this entire thing. It's just a system you can do one weekend. You set it down and you are waiting for the next week Monday to execute your execution. Okay, so this is what I'll be expecting on this British pounds. Okay, now in case it fails, let's assume maybe there's a bit of push up. I'm still expecting that price will still do exactly what I'm seeing here. Okay, price is going to do exactly what I'm seeing here. So that is the first secret here on this. So I wish you understand what I've just shown you. So just practice it on your own. I'm going to still do subsequent videos so that I can help you to understand this thing perfectly. Okay. All right. So I wish you guys the best. You have a great day.